Why are you bullish?
All right. Well, you guys know. Number one, Bitcoin is commoditized energy in the form of money. Number two, Bitcoin is the reserve asset of the internet economy. And number three, Bitcoin is the most pristine form of collateral in the world. But look, you guys already know that, so I'm not going to bore you with that. I got a brand new reason why I'm bullish today. And I'll tell you why. Because the traditional system is collapsing in front of our eyes. That's why. What everybody is neglecting right now is look at the treasury market, right? We mentioned Argentina. Well, you know what Argentina's interest rate is right now? It's 118%. You know what their inflation rate is? 108%. Because raising interest rates doesn't fight inflation, not when you have this amount of deficit spending and debt. Matter of fact, Max Kaiser quoted me the other day. It got put into Forbes about the debt spiral because the mathematics just doesn't work out. You cannot raise the interest rate when the government is running a huge deficit, when the government is promising to pay $200 trillion of unfunded liabilities, and then you have to pay a higher interest rate on that. Look, there's only two entities that can create dollars in the entire world: the US government through deficit spending, or banks through credit extension. Okay, when interest rates go up, it costs the government more money to deficit spend. That means they have to print more currency units. That's the definition of inflation. When interest rates go up, people aren't supposed to borrow money. Oh, well, wait a second. Isn't credit at all-time highs? Take your Keynesian economics and shove it, because the data is showing us something different. Credit is going up, and it continues to go up. And banks don't want to lend to Jimmy and Johnny because they don't qualify. But guess what? The people who own the companies that Jimmy and Johnny work for, they have the cash flow, they have the assets, and they're getting access to the money. You think the wealth gap was bad over the last few years? Wait until you see how worse it gets if they stay higher for longer. Here's the problem. They're not going to be able to stay higher for longer, because what's happening is the yield curve is normalizing. What's the yield curve, CJ? The difference between the short-term rates and the long-term rates. The Federal Reserve stated the rates higher. They raised the rates to fight inflation. We already know that that's BS and it's not going to work. But what's happening is the long-term rates stayed lower. And the reason that the long-term rates stayed lower was because the people believed the Federal Reserve. The Federal Reserve targets 2% inflation. Sir Ulrich, they only want to steal 2% from us per year, right? So sit down and shut up, because they're not stealing that much, right? They target 2% inflation. The rest of the marketplace, we had an inverted yield curve, the steepest and longest inverted yield curve between the 10-year Treasury note and the 3-month Treasury bill in the history of recording, right? At the same time, Treasuries are performing the worst they've performed since 1787. 1787. Do you know what was happening in 1787? That was shortly after our country declared independence. And the interest rates were so high because nobody knew if our country was going to exist. Well, guess what? Treasuries are performing that bad because people with real money who are trying to protect it, they don't know if this country is going to exist. We're in the same situation. Everything is falling apart at the same time. The 10-year Treasury note yield is now normalizing. What does that mean? It's now working its way back up above that 3-month bill rate. Well, why would it do that? It's the free market signaling to us, right? Price is the language of demand. Interest rates are the price of the currency. The price is going up. What is the bond price is going down, but the yield is going up, right? It's an inverse relationship. So what is the market signaling to us through this price action? They're calling the Feds bluff. They're saying, hey, we don't believe inflation is going to be held long-term at 2%. We're calling BS on your 2% inflation target. And for that reason, we're going to sell at 4.9% instead of buy, right? Because if they believe the Fed, you'd be happy to buy 4.9%. Because if you believe the Fed, inflation is 2%. And 5% minus 2% is 3%. So that means you would get a 3% real rate of return, right? The APY of the note minus what they say inflation is going to be gives you your real rate of return. So if you have a positive real rate of return, you can actually increase your purchasing power over time. Well, the free market believed the Federal Reserve's 2% target. Therefore, even though the short-term rates went high, the long-term rates stayed low because people were buying. They were buying. It's 2% inflation. We're at 4%. This is fantastic. We're at 3%. I'm getting real rates of return here. What we've seen over the last couple of quarters is that the yields have broken up to new highs. The normalization process is the free market signaling to us that they don't believe the 2% inflation target. Now, the reason that that's bullish is because it highlights the reality of the situation that the U.S. government is in. And that situation is the death spiral. So what they're going to have to do is they're going to be forced to take action. They have to ask ourselves, what's worse? Is it worse that the long-term rates go above the short-term rates and we have to do yield curve control to cap the rates? Because the free market is now asking, what is the rate of inflation? We don't know who to trust anymore. So we have to discover that price on our own. Or is it better for us to just state the rates lower, have an artificial normalization, and yeah, rates go down, people want to borrow more. But ultimately, when rates go down, right, the government doesn't have to print as much money to deficit spend. So there's a trade-off between the things that are happening right now in the bond market. It's a sophisticated market, and it's not easy to understand. I mean, if you don't understand the difference between money and currency, surely you aren't going to understand the difference between a currency derivative like a bond, right? Dollars are a derivative of the bonds. Bonds are a derivative of taxpayer money. The government is spending all of our taxpayer money, plus printing more of it and spending that into circulation as well. There is no way out of this. People need to wake up right now because the system is collapsing right now. If you think things are normal, they're not. And I don't know. This is why you see it burning up in me through this whole episode, because I'm trying to figure out a way to deliver this message to my fellow Bitcoiners so that you can tell your family and friends what's happening right now. Because you are not going to hear this on the news. You're not going to hear it from the talking heads. What's happening right now is the largest sovereign debt market in the world is blowing up, and everybody is in denial. Nobody understands the repercussions of what's happening. The bond market is the collateral. It is the base layer money, just like Bitcoin is the base layer money for Lightning. It's the collateral that facilitates the transactions on the Lightning network because it's settled in that collateral. Well, in the traditional system, treasuries are the collateral, and banks hold that collateral on their balance sheet as an asset. And the circulating liabilities that we trade between each other in our bank accounts, they're just digital numbers. The underlying collateral, the value of that collateral is eroding. It is eroding beneath the system. And now it's not eroding because they stated the rate higher. It's eroding because they're losing control of the yield curve. The free market is calling their bluff, and risk is being repriced. Before, treasury bonds were, well, hey, there's no risk. It's risk-free. And that's partially true because if you hold that bond to maturity, you will get principal and you will get interest. That's guaranteed because they have a printer. So you're going to get that money. But what the smarter, wider market is now starting to figure out is, well, I understand I'm going to get paid the money, but what the hell am I going to be able to buy with that money? Right? I was looking at a single family home in 2020 and it was $225,000. And now, even after they froze the markets with what they did with rates, the single family home is still $400,000, $450,000. It's 100% more. So I don't care if you're getting 5%. I don't care if you're getting 10%. It doesn't matter what you're getting. That's not 100%. It's not the pace at which the system is deteriorating is accelerating. And it's accelerating to the point where all the bells and all the alarms and all the whistles are going off. And the biggest people in the world who get the time and the platform to warn people are pretending that nothing is wrong. Everybody right now should be extremely concerned, and they should be doing what I think. Here's what I'm going to call it. This is why I'm bullish, because Bitcoin is systemic diversification. Bitcoin is systemic diversification, right? Concentration builds wealth. Diversification preserves it. So if you go into the stock market and you got oil and you got a few ETFs and you got an index and you got this and you got some blue chips, that's not diversification. You're all in the same system. You need systemic diversification. You need something where when this thing crashes and burns, because it will, and it is right now, that you're not going to be trapped in that system. You need wealth parked in an alternative system. And because people have come to trust over long periods of times, there is no alternative system. That is the system. So Bitcoin is the alternative system. And look how fast it's developing. It's developing just as fast as the traditional system is crashing and burning. And right now, here today, we need to acknowledge it. We need to look the problem head on, just like they did in Argentina. And they need to, or at least the one guy who we hope wins, look that problem head on, address the problem and fix the problem. You need, listen, guys, if you don't want to choose it, that's fine, but you need systemic diversification. Listen, guys, if you don't want to earn 100%, 118% APY, that's okay. Yeah, but when prices are going up 200%, you're still losing, right? And that's what's happening. The system is crashing and burning. There is nowhere to go to escape. If you have stocks, what are you selling back into? Dollars. If you have bonds, what do you? Dollars. If you have all this ETF, dollars. You need to be able to get out of dollars. And for those of you who have been around for a long time, you know when the bull market comes around, sometimes it can take weeks to set up an account. Sometimes it can take weeks to go through the KYC stuff that they make you do. You're not going to be able to. This is going to happen so fast that if you're not prepared now, you're done. There's no way you're getting off this. You have no chance. This isn't the Titanic where you can float on a piece of wood. This was a submarine shooting torpedoes, and it's all going to blow up at once. And if you're on it, you're dead. You need to get off now. And that's why I'm bullish on Bitcoin. Bitcoin is the exit. Bitcoin is the saving grace. Bitcoin is the answer to our problem, which is no longer just inflation and corrupt politicians, but a crashing and burning system right in front of our eyes.
Brought the fire this time. I love it.